Namaste everyone. Hi, this is Kunal Bothra. Good to be back on YouTube Live and after a day's break because we had gone through an extensive understanding of what the markets could be post the RBI policy. Now, tomorrow on 7th of Feb 2025 is going to be an all important day for the markets because it could culminate into the third big event which the markets were waiting for. So the first event, which we had already seen, was the budget. The second was just meandering around the Trump tariff, what the markets could do just around the Trump tariff, whether the markets would open the gap down, whether there could be some bit of negative reaction. And the third big event, which we all were waiting for, was on the RBI policy. So that D Day is finally here for all of us in the markets, and the RBI policy scheduled to be announced tomorrow. That's on 7th Feb 2025. Now, today's discussion is going to be mind blowing because what we'll be doing is we'll take you back to the previous instances of when the RBI did the initial rate cut, and then what happened to the index. And as I said, and as I do every time, you would be amazed with a set of observations which will come out for. So, like what we do every single time, okay, you like the video, you share the video, as well as ensure that you subscribe to the channel. Uh, what we are doing today is going to be breaking the series into two parts, breaking the discussion into two parts. The first part would be of what we discussed and how we managed to come back into the classic mode of picking the right trend, the right data for the index, and the right historical context where the markets would be heading. And the second part of the discussion is where I want all of you guys to be engrossed completely and see where the index is heading post the RBI policy. Okay. Yeah, deja vu. There's a sense of deja vu, right? There's a sense of deja vu in the markets, correct? So I'm sure that all of you guys would be feeling the heat and saying that maybe the markets have managed to heat up and we probably would be in a zone where there could be a lot of comfort building in. But trust me, today's discussion on YouTube Live, what we are having today, the RBI policy could probably open up your eyes and give you a different perspective altogether. So without much ado, let's begin, right? Hi Chandru, hi Alice, Rishabh. I would want everyone to comment uh, which part of the city, which part of the country rather you guys are from, whether you are from India, which part of India you guys are from, and then maybe we can start off with the discussion. As I said and as I promise everyone that it's going to be a thrilling YouTube session for all of you guys because the analogies which we have and the context of the market trend could probably surprise you. Okay, so Alice is saying Alice is from Pune, Rushabh is from Gujarat, Umang Chabra is from Delhi. Okay, good evening, Mumbai. Hina Doshi is from Mumbai. Okay, Vineet Jain is from Surat. So a lot of Gujaratis. Okay, Chandru is from Chennai. Nitin Patil. Okay, I hope I have spelled your name right. Belgaum, you have Kumar Guru from Chennai. Oh, lovely, fantastic. So north हो गया, south हो गया, west हो गया, अब east बाकी है. Let's hope we have guys who join from the east part of India. But like what we do every time, we give you the classical observations and we give you classical set of observations which should amaze all of you guys. So, are you ready? Yes. So, if you remember, we did this budget discussion. Okay, we have one from Guwahati, Manoj Kumar. Hi, Manoj. So, I think the entire circle gets completed, the entire diamond gets completed. So, we can say north, east, west, south. We are catering to all of the viewers. Now, I would request everyone that together, like how you have showered your responses on the comment box, why don't you like and share the video at the same time? And once you do that, let us just begin to understand what the markets do on the RBI policy day and post the RBI policy day. Okay, now just to give you a flashback, we discussed last week what the markets could do, which sectors, which stocks could do on the budget day. So I'm not going into in detail, in depth as of now, on the sectors and the stocks which do pretty well or bad on the RBI policy day. But the discussion today would be on the index trend. And trust me, as I said, once you see the charts of how the charts move post the index, post the RBI policy, you can probably bring in a like to like comparison. Okay. And the date tomorrow, why 7th of February is very, very important, because the most recent one, RBI policy, also happened on this day. So by the time I start the presentation, I would request that if you guys have any understanding of when the last first rate cut policy started, in which year and on which day, you guys can put it on the chat box. So till that time, I will just share the screen, and I hope, like what we do every time, that the screen doesn't blank out. Okay, we have Darshan Mani from Malaysia. Hi Darshan, lovely, fantastic. Okay, so I hope the screen is not blanked out, right? Fantastic. So I hope you guys can see the presentation. So that's Technical Tea with me, Kunal Bothra, and today being 6th of February 2025, we are all set for the tomorrow's trading session. That's the RBI policy day, right? Okay. Now, what is very, very important? So we discussed, we'll just maybe give you a very simple flashback of what we discussed in the previous YouTube live rather. We discussed that how the Nifty was mimicking or rhyming with the 2023 data point for the index, or where the index was in 2023. Now, this could be just absolutely deja vu, right? I hope you guys are feeling those goosebumps when you see the chart. And how can the chart be just absolutely similar? 2023 is on your left hand side, and 2025, where we are, is on your right hand side. This was the day when the markets or the Nifty reacted on the budget day. Extreme volatility for the index. Post that, the next following day, the index opened lower. We gave a negative closing, even though on an intraday basis, there was recovery for the Nifty on this candle day. We call it as a hollow candle for the index, correct? And then follows the next subsequent day, where the index gave a big gap up, and the close was also extremely positive. It's like the index managed to rise till the high point of the day, and then post that, two mild corrective sessions. Now, as I said, this is classic deja vu, because if you come back to this part of the index trend, we've almost tried to mirror the trend so far, right? I hope you guys can see this. We are almost trying to mirror this perfectly. Now, what happens next? Let's just see what happens next. What happens next in this case, first case, is that the index goes into an uptrending mode. Okay. Now, this is so far putting this into the context of what happened in 2023. What happens post the initial bout of volatility, a bounce back, couple of days of cool off, and then the subsequent move on the upside for the index. So this is what happened in 2023, but 2023 and 2025 has one major difference. Why? What is the difference? The difference is 2025, we have the RBI policy. Now, there is a lot of anticipation that RBI, for the first time in the last many years, would start to go into a process of rate cut. Okay, I hope that's the premise and the assumption which the markets are building in. Okay, but what we need to see is that what happens to the markets post the rate cut. If that happens, or if in case tomorrow, fortunately, we see the first step of a rate cut and maybe a series of rate cut which comes by. Okay, before that, we will discuss the first part of our today's discussion, which is the current index stance. Now, this is the FII derivatives data, on the index futures. Now, there are two aspects which is coming out from this data point. Now, of course, today's data, 6th of Feb, is awaited. But as we can summarize from this data, there is one observation which is coming out is that in the last three trading sessions specifically, there has been a reduction of short positions on the index front. So I'm sure you guys all know that the lot sizes for the indices have increased for the Feb series. So that's why you can't connect this number to the previous historical number of the previous month. And that's why we've taken a fresh view from the current series, the February series itself. And as you can see that there has been reduction in the futures index short positions. So generally, I always say this on ET now also that there are two aspects to the market. The first aspect is FIs cutting short positions. What happens when you cut short positions? When you cut short positions, it indicates that the markets can go into a V-shaped rally, right? Because when you are wanting to cut your short positions very quickly, there is always a case that you would want to cut out your positions quickly so that and it doesn't depend whether you are cutting your short positions maybe 20, 25 points, 50 points on the higher side for the index. But the second part is most interesting is that you would ideally want that the position gets unwound, okay, and the position gets built into the long side. So what we are seeing in the last 3 days is a jump in the long positions. So एक होता है short positions cut, which means signs that I want to lighten the positions on the short side. Does that mean that there is confidence from the FIIs that they are wanting to go bullish? No. That confidence data point comes from the index future long positions. And here we can see that from a 24,000 contracts just 3 days back till yesterday closing, we were almost at 42,000 contracts on the index long positions. That tells you that whatever positions are cut from the short side, at least 40%, 20, 30 to 40% of that is coming into the long built-up formations on the index. Okay. Now, once the tilt comes to 50-50 is where we say that the index is at a balanced position. The second part of the data is again very interesting. Now, we look at index futures data. I think that's what everyone tracks. But I also track the index option short positions. Why do we track option short positions? Can anyone tell me why index option shorts? Option shorts is more important or option long positions is more important? According to you guys, what is more important? You can just write it on the comment box. I can read the comments. Is option shorts more critical or options long more critical as a data point? Option shorts, correct. Why option shorts? Because understand this thesis very clearly. The guy who goes for an option short position is the guy or is the person or is an individual or is an entity who takes the higher amount of risk, right? The highest risk is on buying of option or on selling of option. The highest risk is on selling of option. So which means the individual who's selling the option or the increasing quantum of option shorts tells you that his stance of risk appetite is a more stronger stance rather than buying of options. I hope you get this concept very clearly. If not, you guys can just go through the video once again once we complete this YouTube live, because this will give you a context of why option short positions are very important and critical. Now over here, what's the data point which is interesting is in the last 5 sessions, FIIs have been starting to write index put options. Okay, which means what has happened in the last 5-7 days from 22,800 we've moved to 23,700 thereabouts. So almost a 1,000-point rally has happened on the index. Now that 1,000-point rally has happened on the back of One part which is reduction of short positions and increase of long positions. But the second part is also very interesting, is that FIIs are building in option shorts on the put side, which means that my assumption is that from 22,500 or maybe 22,000 as a base, they are now looking at maybe 23,000 as a base, or if some of the FIs maybe are a bit more high risk prone, then they could be looking at a shift of base towards 23,500 also. Okay, so that's the interesting part. So confidence is building up into the FII derivatives data point where they are increasing their put shorts. Put shorts indicates that the expectation is not bearish, or at least not very bearish. Now, as you can see that there has been increase in the call side also on the short side, but then the increase is a bit staggered. So which means what could have happened is 3rd of Feb tak they could have shorted maybe at 23,500, would change that stance and move towards 24,000 mark. So now the FII stance could be that they are looking at 23,000 as a base and 24,000 as a resistance. Broadly, that's my assumption looking at the data from the index short positions from the FIIs. And of course, adding this data or layer of data to the current OI trend from the option chain for the Nifty. Now comes the second interesting part. So I hope you understood the first part of the data discussion, is that the stance from the FI is very critical, very important. They are going in light on the short positions, at least till yesterday, with respect to the index futures. They are building some confidence of long positions, but the biggest part is they have started to go into option shorts and specifically more on the put side. Now, the second part of the discussion is where even when I was actually culling out the data, I was also amazed with the market activity post the RBI policy. Okay. Now, the first rate cut, now, and this is what historical trends have suggested, that the first rate cut, I call it the first rate cut. You know why? Because it's been a gap of more than, I think, 4 or 5 years, 3 or 4 years, that RBI has gone through a rate cut. The most recent rate cut or the start of the rate cut which happened was in the year 2019, 7th February 2019, deja vu, right? 7th Feb 2019 was the first series of rate cut which started from RBI. Where are we tomorrow? 7th Feb 2025. So again, the point is, will history repeat or rhyme? That's going to be something interesting, right? Are you guys ready? Superb. So let's start. Now, this sentence which I'm saying will prove it that why the first rate cut impact is far bigger than the budget impact also. Let's first look at the historical context of the rate cut. Now, of course, our discussion today is on the basis of the premise that we would have a rate cut tomorrow. Okay. Are you guys liking it so far? I assume so. If yes, then do share, do like the video at least, and do ensure that you share it immediately on your timelines. Okay. Cool. So let's discuss the first series of rate cut, the three important rate cut discussions. So what I've taken is I've taken the scenarios where after a gap of many years, RBI suddenly changes the stance and starts the rate cut. Now, again, a very interesting observation is when RBI goes into a rate cut mode, it doesn't signal one-off rate cuts. तो ऐसा नहीं होता है कि आरबीआई फॉर एग्जांपल 2019 में अगर फरवरी में 7th Feb 2019 को when the RBI did the rate cut, it was not one off rate cut in the entire year. When RBI goes with a rate cut, at least that's what the recent last 15-17 years of data has suggested, they go with a rate cut expectation for next 4 to 5 policies at least, and almost on a consecutive basis. So this could not just be a shift of stance, that array RBI is coming with one rate cut and then over, which means we are possibly if the rate cut happens, we would also see a positive commentary from the RBI governor. So that's the expectation which we have, because historically, as we'll see in the next few slides, historically whenever we've seen the RBI going with a rate cut, the rate cut has not been one off, it's been a chain of rate cuts. Now, there were three instances historically when the rate cuts have happened. Now, 7th Feb 2019, as you can see, the RBI went with a rate cut. Why is 7th Feb 2019 very similar to 2025? Because of the rationale over here. RBI did a rate cut in 2019, 7th Feb, to support economic growth. Okay, we are neither into a low inflation environment, we are neither into any kind of a financial crisis. Okay, but we are in that zone where there needs to be some push, some catalyst for supporting economic growth. I am not an economist, I am not a fundamental guy, but the scenarios which I am explaining matches the scenario where we are today in 2025. I hope you guys would resonate with my frequency over here and sense what I'm trying to indicate. 2015, 15th Jan 2015 is where we had the prior rate cut prior to 2019, of course, where we were going through a low inflation environment. 2015, if you remember, the Brexit and the PIGS, PIIGS, Portugal, Ireland, etc., Greece, that crisis scenario was going on at that point of time. 2008, I think we all know, and most of you guys who are into the markets since the last 15, 20 years, you would have known, you would have felt, and you would have understood what happened in 2008. And that point, RBI came with a rate cut in October 2008 with an expectation that they would want to avert the scenario on the financial crisis and ensure that the markets, or rather not the markets, but the economy makes a very strong comeback. So these have been the historical timelines of the rate cut. Now let's go one step in detail. As I said, 2008-9, when October rate cut started off, there was a series of rate cuts. So as you can see, there was almost 6 consecutive rate cuts, almost like every month or after every 3 months, whenever the RBI policy happened from that October 2008 cut, which means that the first signal is not to have a one-off rate cut, but to have a series of consecutive rate cuts. In 2008-9, the dire need at that point was to let the economy come out from that financial crisis, which was looming large, especially across the globe. And then we had a series of rate cut. You guys can see the timelines also. 2015-16 was again a zone where the RBI went into a series of rate cut. As you can see, almost 7 consecutive rate cuts. 6 consecutive, sixth or seventh में आप देख रहे हो कि there is a gap of almost 9 to 10 months. But here also you can say 6 consecutive rate cuts. This is not a coincidence, guys, not a coincidence. 6 rate cuts in 2008-9, 6 rate cuts in 2015-16, 2019-20, again 6 rate cuts, 6 consecutive rate cuts. So one thing which gets proof from this data point is that if tomorrow RBI goes with a rate cut, would this be a one-off rate cut? What is your sense now? Now that I've given you a very classic and I believe so, a fantastic understanding of where the rate cut scenarios have been placed earlier. Would this be a one-off or would this be a chain of rate cut? How many rate cuts can we assume? Could happen if we go back into the historical context? At least 4 to 6 rate cuts on a consecutive basis should happen, right? Now, the first question which I ask is, what happens according to you once the market gives the first sign of a rate cut. What happened in 2019 or 2008 9? What is the first understanding which you get? What is the first sense? Rate cut होता है तो क्या होता है? Rate cut होता है तो we our expectation is that markets are likely to dip or rise, likely to dip or likely to rise. Markets are likely to, there is an expectation there, right? That the markets are likely to rise. The markets are expected to, yes, Bhavini Vora has said it perfectly, that expectation is that the markets could go up. Nitin Patil is also right that the markets could go into a rally mode. Does history support us in this view? Let's see that. Right? Let's see the impact of RBI policy in the previous zones where the rate cuts have happened, and especially the first rate cut. As I said, a series of rate cut is generally considered to be positive, but does the first rate cut enthuse that kind of positivity? This was 2008, 2009. The blue line, what you can see, is the day when the RBI came with a rate cut. That was on 20th of October 2008. Post that, in the next subsequent 5 days, this is what the initial reaction was for the index. Okay. First reaction for the index in 2008, 2009. This was at a point where the markets were going through a major crisis. So, of course, the scenarios that time is different than the scenarios where we are currently. But then what happens after this? If the first reaction of the market is to go down, which means a series of maybe 4 5 trading sessions consecutively negative, then the subsequent time when the market rallies, it comes back to the starting point, which means there is a V-shaped reaction to the market. I hope you guys agree over here, right? You guys can see that from the rate cut, first rate cut which happened 2008, the initial reaction was the markets went down, and because the markets sold off aggressively, the next immediate reaction was that the markets got into a V-shaped rally, and this rally took the index back almost exactly to the starting point or the closing of the day, which means tomorrow whatever close we see for the index, get ready for a major V-shaped kind of a move for the index. तो अगर आप 10 दिन बाद देखोगे या 15 दिन बाद देखोगे तो मोटा मोटा we should be at the same stance on the index. That's what 2008-9 tells us. What's 2015 telling us? 15-16. Again, on the day of RBI rate cut, the index closed on a positive note. That was followed by a series of positive candles for the index. And then the next subsequent 15 days, the Nifty corrected. And then the correction happened exactly. This is exactly to the point where the close happened on the index on the RBI policy day. I hope you guys can see and understand, right? So initial move up 2015-16, but then the next move was on the downside. 2008-9 was the first move on the down, and then the second move on the upside for the index. And here the first move was up 2015-16, and then the subsequent move was on the downside. Can you tell me what was there in 2019-20? 1920? Let's look at the scenario, right? This is what happened in 2019-20. Again, the index, which was almost at 11,000 levels, we fell to 10,500, and then we bounced back to 11,000, 11,050. So in all three scenarios, all three scenarios, there was a V-shaped. So either what comes next, even I don't know whether we see a rally first or whether we see a correction first. But जो भी होगा बहुत impactful होगा, right? I hope you understand this part of the observation. Whatever happens post the RBI policy, you may not see a swing of just 50, 100, maybe 150 to 100 points. You should be able to see a swing of at least 5% on the index, assuming tomorrow we get the first rate cut, which is anticipated by at least 75% of the market participants, on the RBI policy. Now, the first question is, can we predict or can we forecast to a manner कि यार ये लो जब बनता है तब वो क्या ट्रिगर आता है, जब हमको पता चल जाता है कि यार ये लो जो है ना, ये लो पे हमें चिप इन कर देना चाहिए. So do you want to know what happens on this low, and can we, for example, predict or at least come to a point where we say that markets could probably have formed a bottom? Now for that, we come to this chart. This is the India VIX chart of 2019-20. Okay, this is the India VIX chart of 2019-20, and this is the Nifty chart of 2019-20. Okay, very, very similar. The India VIX in 2019 was almost at 18 to 19 mark. As you can see over here, 18 to 19 zone for India VIX. Around the budget day, we fell on the India VIX. We've come back to 14, 15 levels. Now the bottom for the index happened on this day, which was 19th of Feb 2019. That was the time when bottom happened for the Nifty. 19th of Feb को क्या हुआ? The India VIX comes back to its recent swing high, recent closing high, which was around the 18 to 18 and a half, 18 to 19 zone के बीच में, right? So when the India VIX comes to the recent swing high, when the India VIX comes to the recent swing high or just on that closing basis, is where we can, to a larger degree of, I would say, stronger probability, we can forecast and say that this is the zone where the index will bottom out, right? This is the zone where the index will bottom out. So this could give you a perfect scenario, right? So India VIX 7th of February 2019, India VIX from here rises back from 14-15 levels to almost 18-19 mark. You guys can see, which coincides with the recent high for the India VIX. And here the Nifty, after a first round of correction, comes back into a major breakout mode. Now, as I said, what sets the tone for the markets is whether it's the first rate cut or whether it's going to be a series of rate cuts. So the first impact for the market is cut the weaker hands out. Okay. So before every rally every rally restarts or resets, the market participants want that the weaker hands be cut out. Okay, weaker hands को निकाल दो बाहर. So weaker hands को निकालने के लिए सबसे बेस्ट स्ट्रैटेजी क्या होती है? Everyone expects RBI policy rate cut, you give that. Everyone expects markets to rally up higher on the day of RBI policy, you give that. But then what disappoints everyone? The third point, everyone says it's a series of rate cut from the RBI commentary. Maybe you get that. But then what disappoints the market is immediately post the RBI policy event, you see a successive days of 5, 6, 7 negative or red candles for the index. That could shake out even the weakest of the weak hands or the strongest of the weaker hands from the markets, right? If you see such kind of a sharp 7, 8 days of a major correction for the index, तो आपका कन्विक्शन कितना भी स्ट्रांग होगा, फंडामेंटली आप कितना भी ज्यादा असेस कर पाओ, बट अगर 5% का मूव आ जाता है डाउनसाइड में, तो कहीं ना कहीं थोड़ा सा जो सिचुएशन है वो डामाडोल हो जाता है, करेक्ट? बट देन दैट बिकम्स एन अपॉर्चुनिटी टू रीसेट योर पोर्टफोलियो एंड देन गो इन फॉर द नेक्स्ट बिग अप ट्रेंड फॉर द इंडेक्स. So this was the major observation. I hope you guys liked it so far. There is another set of observation which is there on the index front. Okay, what is that observation? If you draw a trend line for the index right now, a trend line for the index, we have coincided with the major resistance for the Nifty. This was the high the Nifty made in 26,200 levels, plus minus 50 odd points on September 2024. This was the recent high in December, and this is the most current high which the index has made. Three data points, 3 points coinciding with the big day tomorrow, which is the RBI policy. So, as we discussed, that there could be a potential possibility of a V-shaped swing. तो थोड़ा सा प्रोटेक्टिव हो जाओ, थोड़ा सा एकदम आई वुड से कॉशियस हो जाओ. What data point you need to watch out for is the change in VIX. That will give you the first indication of where the markets bottom out. If in case the markets correct in the next 5 to 7 days post the RBI policy, and that could probably be one of the biggest opportunities you guys would have been waiting for the last maybe 4 or 5 months. Biggest opportunities for short-term traders. So what this tells you is that at least gives you a sense that you should not panic even if the markets correct post the RBI policy. Right? I hope this view is resonated across all of you guys. Would you panic if post the RBI policy the markets go into a correction, say 4, 5, 6 days of consistent correction, even with a positive, hopefully a positive RBI policy outcome and then a positive commentary? Would you panic? I am assuming that your answer would be no, right? Not many assumptions today, but we hope that all the assumptions come out to be as perfect as possible. This was a classic threadbare analysis. आई एम श्योर ऐसा एनालिसिस आपको कहीं नहीं मिला होगा कि आरबीआई पॉलिसी एंड निफ्टी के इम्पैक्ट को हमने इतना क्लोजली और इतना माइन्यूटली वी हैव गॉन इनटू द डेप्थ ऑफ अंडरस्टैंडिंग व्हाट द पॉलिसी इम्पैक्ट एंड द impact on the markets is post the RBI policy. I hope that you guys understood the crux of today's discussion. If you guys have any queries, very quickly we can take queries. Okay, Pritesh Kakani is saying thank you so much for the analysis, very helpful. Thank you so much, Pritesh. Alice is saying will not panic, especially after watching your video. Thank you so much. Okay, kindly suggest. Chandru is bombarding with stocks already. Chandruji, okay, kindly suggest on EIE. I am not sure what is EIE. Is it Engineers India or KNR Construction? Right time to buy and price. I'll go with KNR Construction. So it's actually looking a bit negative on the charts, KNR Construction. If you're looking at a buy price, then I would say that maybe buy about the 310 mark. 310 is the breakout of the 200 DMA for KNR Construction. I think it's better that you buy about those levels. But okay, before you start asking your questions, I hope you love today's analysis. Right? Yeah, Dirish has asked a very pertinent question. If no rate cut, then of course we will go back to our basics and then we'll tell you where the index technicals. So which means if no rate cut, then maybe some bit of 1 or 2 days of disappointment, but then eventually we will come back to the same data point of whether the dollar index is moving up higher, lower, the bond yields on the US markets, whether it's impactful or not. And then of course the big impact is the income tax code, which is likely to come out on this weekend. So that's going to be the next go-to factor for the markets. Rate cut nahi hoga, Nirmal Kumar says. Let's hope, let's see what happens. I don't know what's going to come out. Dhananjay Patil asks on SBI. Very quickly, SBI, I think SBI today has given a bearish corrective zone. But what I can sense from the chart for SBI is that the stock is waiting for a breakout. I'm not sure whether the result was a trigger. I don't know how the results were for the stock. But I would suggest that 780 के ऊपर अगर जाता है तो SBI becomes a very good buy, because that would complete a triangle pattern for SBI, and that's almost like a 50 to 55 or 60 pointer pattern for SBI from that 780 zone. Vinay Kapoor asks on Tata Power and REC. I'll take just one of them. I'll probably take REC Limited because that's a chart which I believe is showing classical bullish RSI divergence, RSC and PFC. जनरली क्या होता है बॉटम्स पे जब स्टॉक आ जाते हैं ना तो बहुत वॉलिटिलिटी होती है but an incremental impact is not there into the stock prices. So there is a sell off, there is a correction, but there is no major incremental damage. I believe so that REC and PFC they have come into that zone where to sit on the stock becomes difficult. You if you do it in FNO, you would be stopped out whether you are going long or whether you are going short. But if you're looking to buy on dips and accumulate this as a part of your portfolio, I think you should use these corrections as a good opportunity. Okay, let's maybe just one or two more queries. Uh, as always, your observations are great. Indumati says if there is a rate cut, would be positive for banks and PSU banks. It is assumed to be, so that's why I have not come out with the stock specific and the sector specific observation. That we generally give it to our clients first because we need to give or mention the impact what happens into such stocks and sectors. We look at the historical context of the RBI policy and then the impact of that on stocks, which are the set of stocks, and there is a classic observation because एक ऐसा sector है जो generally on the RBI policy day which has no impact, no correlation, fundamental correlation कुछ भी नहीं है on the RBI policy day, but that sector in the last 3 occasions has actually given a positive closing on the RBI policy day. So there are a lot many different kind of observations, but we generally don't give that first hand. I have a 450 call of REC, few lots you can hold, but as I said that my sense is that if you do it on the FNO side, you might not earn because ऐसे टाइम में थोड़ा सा राइड करना बहुत डिफिकल्ट हो जाता है, especially when the stock moves up 5-10% swings in a short span of time. Cool. I think I have answered most of the queries. Most of the queries are repetitive. Yesterday I could not come with YouTube live, but that's how it is because we had to go into a complete detail of what the RBI policy could have an impact. So it took us a lot of time to try and fathom and the crux of it because आप जो देख रहे हो in 15-20 minutes is just a summation of the last 24 hours of work which goes by when we come out with such kind of analysis. So I hope you guys loved it. Thank you so much for your time. Don't forget to like, share the video, and on the recording also, if you guys go through the recording, glance through the recording, don't forget to leave your comments on the chat box. Okay, thank you so much guys. Manjunath is saying taking your time and sharing this knowledge of charts. You are awesome and a great analyst. Thank you so much. So guys, let's hope we catch up tomorrow again post the RBI policy, and let's hope that tomorrow turns out to be a very eventful day for the markets. We all want the markets or the economy to start getting a booster of rate cut shots. The Fed has already given it to the US. Let's hope we also start to get that dose. And as we expect that it may not just be one RBI policy rate cut. If it happens tomorrow, it could be a series of rate cuts like what the last 15 years of history has suggested. With that, I bid adieu to all of you guys. Thank you so much and see you in the next video. Don't forget to like, share and subscribe to the channel. Thank you so much. Bye-bye.